This finance update is brought to you by LaTrobe Financial, delivering retirement income solutions for decades.
Thanks for being with us here on Business Now. Well, the volatility in global markets will be causing some to change their investment strategies, no doubt of that, even though that may come at personal cost as markets have rebounded in the past week or so. But also the government's plan to tax unrealised capital gains on 80,000 superannuation funds is reported to have changed investor behaviour already. Chris Andrews is Chief Executive of alternative investment manager LaTrobe Financial, a sponsor of this program, and joins me now. Chris, always good to chat to you. Let's go first to the volatility side. A lot of people see volatility and they go, I want to take that risk out. Do you get a sense of that in terms of the funds flow you're seeing right now?
It's fascinating, Ross. If you think back to the late 80s, we had a Republican in the White House, we had turmoil in Russia, and we had Labor in government here in Australia. So people talk about turmoil, but 25 years later, what do we have? We have turmoil in Russia, we have a Republican in the White House, and we have Labor in government here in Australia. So every investor needs to be thinking of turmoil as being the consistency, the one thing that will continue to happen across their investment horizon. So when we have investors at LaTrobe Financial, what are they thinking about? They're thinking about capital stability, reliable income returns across the investment cycle. The proposition doesn't change.
Okay, so from that point of view, let's go, say, for example, to those superannuation investors with funds with more than $3 million in their super fund.
Yes.
Now, clearly with the threat of an unrealised capital gains tax from July 1 this year, the question then is, well, okay, do they try and find other ways to do things? They're going to perhaps look for fixed interest investments such as you and other providers have got that don't have the capital gains tax implications. Now, for better or worse, that's what ultimately some people will do.
We're already hearing that, Ross. There's no doubt about that. You know, as a investment offering with low capital volatility, low prospect of capital gains, really consistent income-based returns, yeah, it's true. Those sorts of policies are favourable to a business like ours.
And if you like, the risk is inherent in your business, even though you have a broad portfolio, the risk is inherent because of the higher returns that you can generate. So it's not as though the people are taking risk completely out of their portfolio because that's inherent in the return.
No, it's about rebalancing portfolios to meet regulatory settings, Ross. And I think the regulators always need to think about this. I mean, one thing about a policy like this is you can fundamentally undermine what has been a flagship Labor policy, superannuation, asking people to lock up significant proportions of their personal wealth until retirement. So that's been, you know, fiddling with those settings can have long-term unintended consequences. And I think there's a little bit more to go on that topic.
And even though it's 80,000 super funds, and everybody goes, oh, well, that's not very many, it's the lack of indexation that is troubling a lot of people because in 5-10 years' time, it's not 80,000, it's many hundreds of thousands of superannuation funds.
Yeah, and the fundamental prospect of people being taxed on unrealised capital gains, I think that strikes a chord with a lot of investors, whether or not the exact policy setting occurs, you know, it will impact them personally or not. Does it pass the sniff test? Now, this is where Labor are really going to have to get out and sell that policy. Because on the face of it, you know, you're going to have small business owners, you're going to have farmers. They won't have the income to pay their tax bill.
No,
what happens then?
And there's also a double standard about what happens to politicians in defined benefit superannuation funds that comes in. One final thing I want to talk to you about. There's a hot race on for deposits. When I've spoken to bank chief executives in the last week or so, they've all told me that that's where there is hot competition right now. You're in that game. Do you sense that as well?
We're seeing really good volumes coming through. Obviously, we're not a deposit product, Ross, so we're not competing for that same flow. But a classic response from investors when you're seeing times of market volatility is to look for safe haven assets. And certainly deposits, what the banks are experiencing, are right in the crosshairs of that. So it's not a surprise at all to hear that from the banks. And I'd expect that to continue. Whilst there's a bit of a calm in markets at the moment, the next 3-6 months remains to be seen. And we still have some really unusual trade policies being played out across the world. How that's going to impact markets in, say, June, July, August, that remains to be seen, Ross. So
and the cost of those funds is important given some of the reviews of our AAA credit rating. Chris Andrews, always good to have you in the program. Many thanks for your time.